What's going on, YouTube? I'm looking at some more energy stocks today to add to my portfolio so I can diversify. If you don't know what diversification is, here's a video about diversification.
Hello, fellow investor. In today's volatile markets, building a stable portfolio starts with one key strategy: diversification. Let's explore why. Imagine putting all your savings into one stock. If it falls, you lose big. Diversification is like spreading your eggs across several baskets, safer. Data shows diversified portfolios weather storms better. Historically, a balanced mix has delivered steady 7 to 10% annual returns with less volatility.
Now that we know what diversification is, so why am I building this portfolio? Well, it's a dividend portfolio for a bridge account, so I can have passive income. If you don't know what passive income is, here's a video of what I think passive income is, and there's only two types.
Serious right now?
Yes, I'm serious.
Okay. The quickest way to not be on a beach in Mexico is to think that passive income exists. I think the reason so many scumbuckets are making so much money is because you're buying stupid courses over and over, thinking there's some magic formula for passive income. Passive income looks like this. You take money that you can afford to go to zero, and you put them into two places that have historically created passive income. Public markets that you don't care if it goes up and down and you just wait to the end, or real estate, and you hope that your real estate area doesn't get crushed.
Oh, what passive income is? How am I going to invest this? Well, I'm going to invest in companies I want to own. After I read the book, The Intelligent Investor, and listened to Warren Buffett, and this is what he had to say.
It rejiggered my mind, and when I read the book, The Intelligent Investor, and from that point, I never bought another stock. I bought businesses that happened to be publicly traded, but I became an owner of a business, and I did not care whether a stock went up or down the next day or the next week or the next month or the next year, and I didn't have any idea what it would do. I didn't know what the stock market would do, but I knew businesses.
Warren Buffett, the great investor. I'm going to copy him because he's a good investor and he had great returns. So this is the thing about it. I'm building this portfolio for a bridge account, and I have a purpose for this portfolio. So why am I doing it like this? Well, because I want to have criteria and not just buy any random company and take a chance. I built this system and I want to see how this system is going to work out. And this system is it has to pay a dividend for number one.
Never buy a stock that doesn't pay a dividend. That has been your advice through and through. Why are these stocks more attractive?
You look at companies that don't pay distributions, don't return capital, how risky they are. Take a GoPro, for example. I'm not just picking one company. I'm just giving you a good example of a company that basically has lost 70% of its value, never returned a dime to shareholders. Or how about a company that's been around much longer, Yahoo? Never paid a dividend. It's never made money for anybody except all the CEOs that have gone through there and got whacked.
Number two, it has to have financial stability. I don't want to see negative cash flow. Negative cash flow does not make me happy. It makes me think they can go bankrupt and it's not worth having them. You can't run a company on a negative cash flow, so this is my personal opinion. Number three, they had to have good performance. Without good performance, I don't want to even look at them. And number four, I want ownership of the company. Now, let's get into this video about what stock it's going to have, since you know my requirements, and it's going to be Entergy. It's another electric company that I'm trying to see to add to my portfolio. I just added Duke to my portfolio, and I'm trying to add another energy company so I can have a diversification. I want to have pretty much two in energy. I want to have 2 or 3 in AI. I want oil and gas. So I'm trying to diversify it nice and evenly, so the risk and reward is different. So let's go into this. If you don't know where Entergy is, here's a video of a company, what they do.
Stock symbol ETR represents Entergy Corporation on the New York Stock Exchange, NYSE. Entergy Corporation is an integrated energy company engaged in electric power production and retail distribution operations. Here are some key points about Entergy Corporation. 1. Business operations. Entergy Corporation operates primarily in the electric power industry, serving customers in Arkansas, Louisiana, Mississippi, and Texas. The company generates, transmits, distributes, and sells electricity to residential, commercial, industrial, and wholesale customers.
Looking at it, it's really a not a moving energy company. They have pretty good performance, it looks like, and it has the next phase of super power in Mississippi. So they have a lot going on for it. So I like going to the Wikipedia to sum it up, make my life easier to see it. They have about 12,000 employees. And do they have their profit margin on here? They do not. So that's Entergy. It's just a company that's based in New Orleans and generate district power to Arkansas, Louisiana, Mississippi, and Texas. So it has a pretty big range. So let's go into this Entergy and see how they've been doing. Year to date, they have a 27.38%. 1 year has a 42.68%. 3 years has a 79.30%. And 5 years have a 77.29%. That's great performance. If I was just going off performance and nothing else, this is a stock I would be interested in because it has really good numbers. But these numbers does not indicate what's going to do in the future. So before we go into that, let's look at the dividend. So the dividend for this one is 2.48%, pretty good dividend. Annual dividend of $2.40, payout ratio of 59.80, dividend growth of 6.19, and its growth year is 10 years. So it's been growing dividend for 10 years. Great to know all this information. It pays dividends. So it has 2 check box, has pretty good performance, and it has paid dividend. So let's get into this finance. Finance is very important because it tells you a lot that the stock doesn't tell you. So revenue, 2019, $10.8 billion. 2020, $10.1 billion. 2021, $11.74 billion. Okay, it's going up. 2022 went up. 2023 and 2024, it went down. So if an energy company is going down, are they selling less electricity? Competitors coming in? I tell you right now, that doesn't look good for growth for me. So financially, this makes me wary because it's having a decrease in profit. Now, let's look at the net profit. I like it to be around 14-15% on average. Now, is it always going to be like that? No, but I at least want more than 10%. Higher is the better. And last year had 8.93%. That's under what I would like to see. But the year before had 19. The year before had 7. And then 9. So it ranges from 19 to 7%. So, okay, I can give that an overlook. But makes me worry that it jumps around so much. Now, let's look at the balance sheet. 60 billion, 4 billion, and 367 million is what they're worth. Now, current liability is 6.1 billion. Long-term debt is 26 billion. So they're in $32 billion worth of debt. That's half of their fixed asset. So they're worth about 34 billion, which is not bad. So they're positive, they're not a negative, so that's great news for me. Now, let's see how their free cash flow is doing. Now, free cash flow tells me a lot. I will not waver on this one. If they're a negative in cash flow, I do not buy them. Because they're borrowing money or owing more than they are making, and I do not like this. I don't like that management style. I don't like being in a negative. It just makes no sense. So, the free cash flow from 2017 to 2024 has been negative cash flow. So, negative 1.4 billion, negative 452 million, negative 2.81 billion, negative 4.1 billion. That's extremely high, a lot of negative cash flow. That means they use more than they earn. So for me, I just can't buy it. Financially, it doesn't make sense. And this what wear me off of this stock is free cash flow. That's the money left over after you pay operation expense and capital expenditure. So that's the money left over. They're in the negative. I just can't go with a company that's in the negative. Now, what does the investors in this I like seeing, just in case I see a company that I like? So the top buyers, I don't really recognize them. Top sellers, don't really recognize it. But the company, they do have grant 265 to all these people. It doesn't look like anyone sold it. So that's pretty good. And they're based off of New Orleans. So let's go into the AI. The valuation of this company is a 1 out of 6. I agree with it, that valuation. The earnings, they say it's a 6 out of 6 per share. Now, personally, I can't see that. But if AI says 6 out of 6, it's 6 out of 6 for them. Future growth is 3 out of 6. I can see that, but they're still in the negative. I just can't deal with it. Historical performance is 2 out of 6. I can see that. And financial health is 3 out of 6. Okay. I still don't see why they got a 3 out. So what do you am I gonna think about this Entergy Corporation? I'm not gonna buy them, just because they're in a negative cash flow position. I don't want to own a company that's in a negative cash flow. That's the only reason why I won't buy this company. Performance wise, it's doing pretty good according to the stock. The numbers for their financial, it looks okay. They're making about 9%, 10% on average, and that's acceptable. And the other thing, the reason why I won't buy them is they look like they're losing share of the industry. What do I mean by that? They're going down in revenue. And a company that's going down in revenue means they're losing to the competitors. So if they're losing to the competitor, I don't want to buy a dying company. It makes no sense. It's some people like buying companies like that, but for my portfolios, I don't buy them. So that's the reason why I won't. Now, like and subscribe if you like these videos, but at the end of the day, I won't be purchasing this stock. Do I recommend it? That's up to you. I'm not a financial advisor. I think this stock will do pretty good. It just doesn't meet all my requirement if you just go off the performance of the stock, meaning the charts. But whatever the stock says today might not be what it does in the future.